I just happened to glance over
The
and see
Mexican
this
yarmulke.
in the comments to your point, Paul. And this is a great one. I get asked this all the time. And that is, why is the stock still so high after performing so badly for so long? Well, there is an answer to that. Mike, I don't know if you want to kind of touch on that.
Ow. Hold on. I just dropped my mask. Hold on.
Oh, no.
I'm back. Hold on. I'm coming. Hold on. The sombrero fell off and it ripped my mask face off. All right, why is the stock still performing well? Is that the question?
Yeah, why is the stock still hovering at around that $80 to $90? It's kind of frozen in that range now for a very long time, with a few pops one way or the other, either below or above, but seems to be hovering in there. And if they keep pooping the bed like they have been, Mike, why do you think the stock is still sitting where it's at?
I think there's a few reasons, which we've discussed on this channel a couple times. One of them, I'll just repeat what we've discussed before. One of them is that you've got people like me, people that have held the stock for a very, very, very long time, and we're so embedded in being a Disney stockholder that to not be a Disney stockholder is kind of like just outside of our realm of existence. Now, some of us, like me, took a big chunk of their stock that they made money on and went and bought at 172 to 178, which was a horrific mistake on my part. But I'm just saying, you have tons of people where owning Disney stock has just been part of the, like, I got my block of stock. I think I've said on this channel before, I inherited from my adopted mom who worked at Intel, retired, and took all of her stock, diversified her portfolio. So when she died in the early 2000s, I inherited that block of stock. But she, being a Disney stockholder, was a big thing growing up for her, for like, you know, for us. And, you know, like she had very few shares. So when she cashed out at Intel, she was really proud that she, you know, was able to go and buy more. So William Thompson, you stop that right now. I saw that. Stop that in the chat. Number two is you have a lot of the stock is held by what are called family offices. What are family offices? Well, you have essentially investment advisors where I would say they're larger than a Valiant Renegade, smaller than a BlackRock, but they're these financial advisors that manage the portfolios of incredibly wealthy families that are legacy families, where there might be intergenerational wealth of between 1 and 4 decades, or 1 and 4 generations. This historically has been a hallmark stock that you wanted to hold on to because, like clockwork, it never crashed. Historically, it never crashed. It gradually always went up. Sometimes it might even be there might be an opportunity for a split. But more importantly, number 4,
dividend.
It issued dividends like freaking clockwork.
Yep.
Like clockwork. It
paid a dividend rate that was pretty much average or slightly above average of the S&P.
Absolutely. Like clockwork. So it's kind of like Disney was like, from a stock investment portfolio, it was like going to the bank. Now, the third reason why the stock doesn't suppress is because Bob Iger and his cohorts in the investment community, his what I will say, his co-conspirators that have hijacked this company, the BlackRocks, and the list goes on. They believe they have a very strong social mission attached to their ownership of this company, and they are going to hold on to their stock for dear life. They are not going to want to say sell it at a loss and reinvest, or their thing is, we're going to buy and hold until this company is remade in the image in which we see fit that it should be remade. Which we all disagree with that image, but those are my 3 top reasons why, despite losing money left and right on Disney Plus, despite losing money on every single film, and despite what's happened with the parks, that the stock holds up to be resilient. You have legacy retail holders like me. You have family office stock portfolio managers that have held on to stock. And then number 3, you have Wall Street that has bought into Disney as being transformed as a woke company. And it's an important target because, as we will remember, anyone that has a strong knowledge of the historical significance of Walt Disney from a socio-political standpoint, Walt didn't like communists. Walt didn't like socialism. Walt was not in favor of any of this stuff. So for them to go after this company it's an important flag on an important hill of woke and of communism and socialism and social change that these leftists see fit. They, Disney historically stands for everything that we hold dear in this country: apple pie, Americana, truth, justice, American way, yada, yada, yada. So what better target than Disney to go after if you hate this country or hate the values on which this country was founded?
All excellent points, and you're right on the money, Mike. I'm going to add something to that, and I want to get everybody's thoughts on this. The other part is that, and I've seen this from a number of Wall Street analysts out there, and I think they're right. If you look at the market capitalization of Disney and what it's been floating at for most of the year, let's say it's averaged around $160 billion to $170 billion. If you basically take the value of all of their property, their real property, the theme parks, the resorts, the boats, the cruise ships, all that kind of stuff, domestically and abroad, that's about what Wall Street is saying Disney is worth. They've put almost no premium beyond the actual real value of Disney, basically park and resort operations.
Liquidation value.
Yeah, effectively, Ron.
Asset value.
Asset value. I mean, there's no premium on there for what should be value in the continued power of intellectual property.
But
Marvel, Star Wars, Pixar.
Yeah,
I mean, even ESPN. Yeah, Disney Plus is a drag on the price. ESPN, they're not really putting a whole lot, I don't think they're putting a whole lot of value into linear broadcast for Disney, including live sports. Yes, it generates them a lot of cash flow right now, but of course, what they're concerned about, what the hell is that going to look like 5 years from now? Is Disney going to successfully be able to transition from people watching live sports through linear broadcast, and if they cut that cord and then they move over to ESPN Direct or whatever they call it, not ESPN Plus that Disney has now, that's something different, but an actual ESPN subscription, DTC subscription that is a direct replacement of what you see on your cable provider now, if they have to charge $30 to $40 a month for that service, which by all accounts they will, what is that going to look like? And with the cost of sports rights continually increasing, this is why we see Disney wanting to take on partners for ESPN, a league to get involved, a distribution partner like an Amazon to get involved. Talked about all that kind of stuff. So I think part of the reason the stock price is kind of stuck where it is for Disney is just because investors out there's not a whole lot of perceived value at Disney right now beyond park and resort operations and the value of the properties that they're sitting on.
I have a question. Do their total assets equal their debt? Equal than their debt? Does anyone know what their P&L is?
Mike knows. I mean, they.
Sorry, what was the question? Sorry,
it depends how you value the assets.
Well, that's true too. Paul was asking Mike if you know offhand, or is the asset or the actual hard asset value greater than their debt? I don't think they're upside down in debt, but
no. Well, they're okay. Hold on. There's two ways to look at this. There's current liability, Paul.
Right.
There's current liabilities and current assets, and then there's total assets against total liabilities. Current liabilities, they're absolutely upside down. Absolutely, because all of the debt is either less than 2 years or 2 to 5 years, because the vast majority of it are lines of credit, and their cash on hand is pretty much used to maintain that. Now, the issue about their total assets, there are two different ways to look at it. One is what Disney wants you to think, and the other is what the retail world would think. Because here's the thing. Let's just say, for example, Paul, you wanted to buy Disneyland. What are you going to do with it? Like, seriously, you can't run any of the rides because you don't own the IP. I mean, it's like owning something that is important for what it's deployed as. Because if you, honest to God, if you like level the whole thing and just use it for real estate, well, arguably, it's probably worth more if it's leveled and rebuilt as condos and, HOAs and that kind of stuff. Because
Zara outlets.
Yeah, exactly. That type of stuff. It's an impossible question to. They don't look at Disney stock that way, like they should. In which the way you're looking at it is a classic way to look at it, but they don't look at it like that. Because if they did, the stock wouldn't be performing as well, because they would be far more concerned about the $100 billion worth of debt that they have on their books right now, and the 10 to 14 billion in cash that they have seen around on any given day.
Well, it's the banks who are afraid of whatever bank debt they have. I mean, as someone famously said, the best situation is to owe the banks a ton of money. Then they're scared to death of you.
I don't think they're there though.
Okay.
Yeah.
Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.